Hi everyone, my name is Emily Powell and welcome back to another episode of the SGK Wealth Compass, where financial insights are clearly explained. As always, we have John Steigerwald and Eric Randolph here to tell you what has happened in the financial markets this week. Thank you so much, and we hope you enjoy.
Good morning, everyone. My name is John Steigerwald. I am CEO of SGK Wealth Advisors.
And I'm Eric Randolph, CFP and Portfolio Manager.
Before we begin with Memorial Day coming up, we'd like to thank the men and women of the United States military for your service to our country.
Thank you so much. We really appreciate you.
Eric, why don't you talk a little bit about the two services we provide here at SGK?
Absolutely. A little known fact about SGK is that all of our clients are investment management clients, but not all of our investment management clients are financial planning clients. For a lot of investors, their financial plan is as follows. I'm going to earn as much as is possible and hope that it actually meets my needs.
Hope is not a financial strategy.
That is not a financial strategy. So if you are someone who is not yet retired, maybe you'd like to know, how close are you to being retired? If you actually are already retired, maybe you'd like to know, what's the upward bound of my spending and actually still staying safe as far as my financial planning is concerned. Maybe you'd like to know what's the most tax efficient methodology for me to go ahead and gift to organizations, charities, even family members, anything that's a goal of yours. Ultimately, there's a right way to do it. And actually, financial planning can help uncover exactly what that is. You should check out whoever or talk to whoever your financial advisor is here at SG to learn more.
Strongly recommend you engage us for financial planning.
Absolutely.
And for the record, Eric and I are never going to retire. Take comfort in
You
that.
betcha.
So with the conflict going on in Iran, my son joined the firm here in February. He's indicated that the Strait of Hormuz will open this Sunday. It's his graduation ceremony.
He's been hard at work.
I'm not that optimistic, but it's impacting global economies with the spike in energy costs in particular. So Eric, why don't you talk about some domestic news that came out this week?
Yeah, so I would love to start you off on some really positive news. I don't really have the positive news to start you on, so I'm just going to hit you with the facts. I'm going to start. I know, I'm working at this, right? So housing market, builder confidence ticked up 3 points to 37 ever. So long as it's below 50, what it really means is that the builder's confidence, actually, they see it as being a poor environment, unfortunately. The 30-year mortgage, actually, the conforming mortgage, has ticked up to 6.57%. You may recall in a previous podcast, we were actually looking at the 30-year conforming mortgage at closer to 6.30 and hoping that it was going to go down from there.
Yeah, so there's one point it dipped below 6%.
It had for
conflict.
A short while, exactly. So this is actually the highest point we've seen since last August, as a matter of fact. New home construction fell 3% in April. Single family home starts actually dropped 9%. That's the steepest monthly decline in almost a year. And again, as we're moving into the spring selling season, again, not really a strong approach right now. Also on the manufacturing pricing front, factory activity expanded in May at its fastest pace in 4 years. I know it sounds really fantastic. However, this is driven largely by businesses actually stockpiling their goods ahead of rising prices tied to, of course, the Iran war. So again, this is obviously, again, having an impact. Input prices actually have jumped to the highest level since mid-2022. Again, why? Supply chains disruption and also increases in the energy costs. So again, it's having an impact all the way around. Despite the strength actually in manufacturing, overall business growth has actually been very modest. Companies actually are still cutting jobs as costs actually begin to weigh in. And then last but not least, on the employment front, really not a whole lot of change. We've seen jobless claims came in at 209,000. That's nearly the same as it was before. I know that you've heard in the news, Meta's been cutting jobs, Walmart's been cutting jobs, Starbucks. Those are, again, high profile, but again, nationwide, we're seeing effectively the same thing, which is a low hire, low fire environment. That's still the same thing going forward. What we are watching for are employers husbanding pretty much the employees that they have and allowing for natural attrition and then simply not refilling those roles. And that's pretty much what we're seeing. What are we seeing, though, as far as interest rates and also the international market?
Well, interest rates, so the U.S. 30-year hit a high of 5.18% this week. That's the highest level since 2007, pre-financial crisis. And it's the 10-year that feeds into mortgage rates, which we already talked about, has followed suit. Now, it's off those levels by about 10 basis points as of Friday when we're filming this, but it's still elevated interest rates, and that's a headwind for the U.S. economy. The flip side of that is we're seeing better opportunities in the fixed income market as portfolio managers, Eric and I. Your yields 4-5+% on high quality investment grade corporate bonds.
Long time since I've been able to get a 5%, and I've been able to do that recently. So.
Yeah. It's making the bond market more attractive. On the international side, the UK and Europe are more highly dependent on energy imports, and it's having a real impact on their economies. So in the UK, there's a lot going on politically, which we won't get into, but in particular, employers for the month of April slashed 100,000 jobs. That was like 10 times the Bloomberg expectation, so not good. And that's been a trend that's deteriorating, pardon me. On the flip side of that, UK inflation fell to 2.8% last month, and that was down from 3.3% the month before. So that's a little bit of good news, takes a little pressure off the Bank of England in terms of raising rates. It could be a sign of a slowing economy, though, so that's always a red flag as well. We'd have a bit of good news coming out of Germany. There's an organization called the IFO Institute, which releases a business confidence survey. So for May, it came out at 83.8, which was up from the 83.5 the prior month. To us, it's an indication that it's possible businesses in Germany are looking past the worst of the conflict going on in the Middle East, looking forward to some sort of resolution. We hope that comes soon in particular. Moving on to company news, we had a couple of earnings releases this week. Core holdings we've held for a very long time. Walmart in particular, we've held since the pandemic hit. We originally got into it in March of 2020. We don't want to forget that period, but it's been a great stock for us. They had a stellar quarter. Net income was up 19%. Revenues grew over 7%. In particular, their e-commerce business is on fire. They compete directly with Amazon, and they're very effective with Walmart Plus. Particularly, they've made better inroads than Amazon into the high-end consumer market, so wealthier clients, and that's what that growth is attributable to. But the stock was under pressure on the day of the release. They reaffirmed their full year guidance, but they issued pretty conservative guidance for the next quarter, which makes sense to us. And what they're seeing is that their average everyday consumer is under pressure from rising fuel costs, which we can all understand when we go to fill up our cars at the pump. In other news, Deere had earnings released this week as well. Stellar numbers again. For example, their EPS, earnings per share, on an adjusted basis came in at 6.55 versus the 5.7 expected by analysts. That was helped by close to $300 million tariff refund. Good. Kudos to them for applying for that and receiving that. So farmers are under pressure. Here's the issue. The stock retrenched. They reaffirmed their full year guidance, but definitely they cited the fact that farmers are under pressure. Their incomes are being squeezed. Certain commodity prices, particularly for grains, have actually come down in price, unlike oil and natural gas. And then the rising energy costs have compressed their margins. But in particular, a lot of people aren't aware of this, but the ingredients that goes into fertilizer passes through the Strait of Hormuz, a high percentage of it. So fertilizer is hard to come by, and the costs are significant as well. So overall, it was a good report. But one highlight, though, is they saw their construction equipment division. Sales increased 29% year over year. Guess why, Eric?
Would that have anything to do with AI?
Yeah, data center construction. So again, off the charts. Well, we had a couple other companies in news. Why don't you touch on those?
That we did. So here's the part where I actually get to give you some good news. Okay, so I've been waiting for this opportunity here. So IBM is in your portfolio, and again, a lot of you may not necessarily know exactly how does IBM fit into everything. Right? It's technology. Is it necessarily AI? Well, actually, it's a multi-hit player in your portfolio. So IBM is cloud computing. IBM is also artificial intelligence. It's also enterprise software. What you may not know is that they also have a huge foray into the field of quantum computing. You may have heard of quantum computing, but what exactly is it? Right now, quantum computers actually operate completely differently than your traditional laptop or desktop, possibly what you're watching this podcast on right now, whereby there are certain problems, if I were to give them to your computer to solve, it would solve it, but it would take approximately 5,000 years for it to go ahead and either decrypt the message that I gave it.
Yours
I know, exactly, right? Just maybe mine, maybe not yours. You're going to be around for a long time. So, however, if you were able to give the same problem to a quantum computer, which actually uses the laws of quantum physics, okay, it could solve that same problem in about 5 hours.
Incredible.
Exactly, right? So right now, most of the applications are mostly in research. However, it is expected that this is actually going to have huge impacts as far as national security is concerned, as far as financial encryption is concerned, even drug discovery. And so why is this such an important thing? The Trump administration recently agreed to award IBM $1 billion towards building a factory for the production of quantum computing chips. I believe they're going to, has a really interesting name, like a new company called Alderaan.
It's like Star Wars.
Exactly,
Star
right?
Wars now?
Right, not too far from it, right? Which is going to go ahead and manufacture the processors. IBM stock is up 8% on the news.
That's great.
As a matter of fact, also.
One other quick point. So Alphabet last year, another SGK core holding came out with the first quantum computing chip, for the record.
That's
if you
right.
Recall that we talked about that.
We did.
In a week that wrote about it.
We did.
All right.
And then beyond that, also NextEra Energy. So this can be a bit of deja vu, right? There was a name that was in your portfolio some time ago called Dominion Energy. We actually got rid of Dominion Energy, but since then they've actually cleaned up their act. And now NextEra Energy, and NextEra Energy should give you some explanation. NextEra Energy is the largest utility company in the country. This is by market value, and also the country's biggest developer as far as renewable energy is concerned. And they are actually making a purchase of Dominion Energy at a price, nice low price of $67 billion. Okay, what this is going to do is actually going to expand their reach from Florida all the way through Virginia. Virginia, why? Because Virginia has
data centers, Loudoun County, data center capital.
Data center capital, right? Data center central right here in your own backyard. And this actually is going to provide them, again, projected energy production of 224 gigawatts of energy over the next decade. That's the equivalent of 180 million households, as a matter of fact. So again, a lot of energy production, but again, really good news for NextEra Energy. And I think,
the stock pulled back a little bit on the news, but it's been a great stock. We look at it as a buying opportunity.
We believe this is going to be a great opportunity going forward. That about wraps it up for this week's episode. We thank you very much for spending your time with us today. We hope you have a fantastic long weekend. And as we say here at SGK, cheers.